Okay.
Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is July 4th, 2022, and the question is, can we also expect fireworks from Bitcoin and the rest of the cryptocurrency markets, just as we do from the celebrations from the US's Independence Day celebration? All right, I'm going to get into that and why it is very likely. There's one indicator that I'm seeing on my charts that's telling me that the answer to that question is yes, indeed. Today may very well be the day we can expect pumps in the markets, volume spikes, and big runs. So if that interests you, then watch until the very end. I'm on the 4 hourly chart with Bitcoin, and I'm looking at this structure that we've looked at many a time on this channel. Okay, and it's very, very simply a corrective basing pattern. Okay, a corrective basing pattern, or as I call it, a consolidation reversal pattern consisting of three main uh, corrective patterns or corrective sequences. Okay, you have your initial break of structure right here that I have. Let's just change that color really quickly. Let's put it in yellow. Okay, and then you have your B wave right here. Okay, that's basically your counter to that A wave. And then last but not least, you have your pivot, right? Your A, B, C pivot. Now, you all know this if you're subscribed to this channel. I talk about this ad nauseum. This is essentially what Ralph Nelson Elliott called an A-B base, what I call an A-B reversal pattern or recursive A-B reversal pattern. It's reversal consolidation. It's tricky. It takes a while. It's not fun. It's not really tradable because there's way too many kind of variations of it. But it basically lets us know that an asset is basing and it's ready to reverse course and change trend. Now, the reason I think that today is a special day in terms of are being able to reasonably expect strong positive price action is simply because we've broken the 21 exponential moving average. If you're subscribed to the channel, you'll know I don't typically use indicators. Okay, I don't use my EMAs often. I used to, but I rely mostly on price action and wave patterns and such. But these exponential moving averages or moving averages sometimes are very useful, especially the exponential moving averages, because there's less lag. And the 21 exponential moving average is one of my favorites because one, it's a Fibonacci number, okay? And so there's mathematical significance to that 21 exponential moving average. And then two, we tend to see, just based on experience, that the 21 exponential moving average tends to guide, or it's a reliable indicator of general trends, especially on a large time frame. So on the 4 hourly time frame, which is not a huge, it's not a massively large time frame, but it's large enough to see what I'm saying. And it's essentially that when we're under the 21 exponential moving average, we're moving down. When we're above it, we're moving up, okay? And obviously you'll have some points where you just peak above it and then you crash below it right here, okay? And then you were above it for this entire, or sorry, below it for this entire move. And in reversal, you're basically dancing up and down around the exponential moving average, as you see here, okay? So I'm just going to zoom in here. You can see that when we hit this bottom, on June 18th, we were way below, extended way below the 21 exponential moving average. We popped above, below, above, below, but not as low as, we did in the orthodox low on June 18th, okay? So we went below and then we popped above, but we didn't keep it, okay? That was a big wick. Now we came back below, closer, right? It's not like we popped down way too far below the 21 exponential moving average here. We popped closer. And finally, I believe, based off of our wave analysis, right, that I've gone over on this channel, it's likely that this represents a leading diagonal move up and finally above, changing the trend, at least on the shorter time frame. Okay, if you subscribe to the channel and you watch this analysis on a daily basis, you know that I believe what's going to happen with Bitcoin is we're going to do something like this, right? When we put in our A waves, our B wave, our pivot, we're going to come up here and then consolidate some more, okay? And we may even form a new low, okay? We may. I don't know, because there's so much variation in this reversal consolidation patterns. I can't say for sure, nor can anyone say for sure what this B wave, if this is going to be a big A, okay? What is this B wave going to be like? Will it be a flat correction? Will it be a zigzag correction? Will it be a triangle? Who knows, okay? And that basically predicates the price action that we can expect, because if it's a zigzag, we're likely to get a lower low. If it's a triangle, we're likely to maintain this as the orthodox low and then stay and consolidate in this region. So we don't know. We'll have to wait and see. Okay, so this is why I think you can see this across the board. You're basically holding the 21 exponential moving average on the 4 hourly time frame and popping above it. And I'm going to show you this on numerous assets in our watch list. So that was Bitcoin. So given that you're above the 21 exponential moving average, positive price action is just much easier. And when you're below it, negative price action is much easier. They kind of work in that way. So just going down the watch list, you can see this same phenomena, right? You can basically see the same phenomenon where you're above the 21 exponential moving average, you're retesting it, and you look like you're going to break it to the upside, okay? Of course, you had these pop-ups above, but then you lost it. But again, this is all within context. This is why it's tough to do analysis exclusively using indicators, even reliable ones like the 21 exponential moving average. It's not a trading indicator. It tells you part of the story, but we're using this in context of our larger wave analysis, and our larger wave analysis shows us a complete consolidation reversal pattern, right? A big A, a big B, a small B, right there. So in context of the larger wave analysis, this, and using the 21 exponential moving average, and this is, I think, how indicators are successfully used in concert with good price action analysis. You can see that it's likely that today will see us continue up and out of this consolidation reversal pattern. Same thing in Litecoin. You're barely just now retesting the 21 exponential moving average. Vervain, you've been above it, and you see, because Vervain has been above it, it's been able, or maybe it works the other way, because the indicator doesn't dictate price action. Price action dictates the indicator. But you know what I mean when I say this. You can see the price action above the 21 exponential moving average, and it moves freely above, making higher highs and, making big waves to the upside, even though it doesn't keep them. As a result of being above this 21 exponential moving average, like, you can expect, big moves to the upside. That's essentially what that means, right? Reserve rights, you can see, has yet to break the 21 exponential moving average. So I expect this to lag a little bit, but once it does, I expect it to pop. It's one of these, that's kind of like the characteristics, or the character, if you will, the idiosyncrasy of this particular asset. Yeah. Telcoin right at the 21 exponential moving average. And like reserve rights, I think Telcoin's one of those that once it breaks, it breaks. Dodo right above it, just hit above it, already retested it. I do expect some fireworks today. Okay, and Kadena is the most interesting on this watch list to me for two reasons. Not just because it breached its 21 exponential moving average, looks like it's retesting it. Okay, and again, context. You can say, Dean, but that was breached here, that was breached here, and that was breached here, and it was lost. Yes, it was lost because this, my friend, was a B wave. This was this was a B wave, okay, to this A wave right here. So yes, it was lost. It wasn't expected to hold right here, nor was it expected to hold here in the initial breakup structure, right? So always context. But Kadena is particularly interesting because you have strong bullish divergence on the 4-hourly time frame. Okay, what does that mean? That's basically when there's divergence in a momentum indicator like your stochastic RSI that I like to use, right? And price action. So I'm just going to illustrate that really quickly. You have lower lows in price action, right? All right. So from this low right here to this low, obviously you made, let me turn off the magnet, it's driving me nuts. You made lower lows, okay, lower prices. But in the momentum indicator, in stochastic RSI momentum indicator, I'm going to enlarge it a little bit. You see higher highs, and higher highs in a very bullish sense where it's coiling up, right? So I do expect a big pop of all of the assets in the watch list. I think that Kadena may be the one to run the most, okay? Then probably, reserve rights and Telcoin, who's to say once they breach their 21 exponential moving average, they might just, run. But so far, Kadena's looking the most bullish on the 4-hourly time frame. So that's pretty much it for today. There's not much that's changed. As I said yesterday, I do expect a green week, all things considered. So yeah, it's just a waiting game, right? We had ample time to accumulate in Bitcoin. We had from the 18th this orthodox low. We had about 15 days, and then in most of all these altcoins, we've had 51 days, I think now, since May 12th. Since May 12th. So that's a while since May 12th. I think it's 51 or 52 days, yeah, to accumulate. So just keep in your mind, I think this is important to reiterate. This is the scale, the magnitude, the time that large time frame reversals take. This is a time frame that they're on. 50 or so odd days of reversal consolidation. That means you have 50 or so odd days to accumulate the bottom. So when people say it's impossible to buy the bottom, you know that that's not correct, because you have a chance. It's not necessarily easy, but if you can properly identify the basing of an asset on a large time frame, right? Maybe a primary or a cycle wave, you may have 50 or so days to accumulate. All right. So that's it from me. Hope this was helpful. Hope this was useful. Please like, share, and subscribe if you got value. And have a great July 4th. If you're American, happy Independence Day. If not, have a great Monday. I'll see you guys soon.